Good day and welcome to another episode of your Money Moment. I'm your host, Mauritz Oberholzer, and today we'll talk about the topic of what happens to your investments at death. This is a question I get asked quite frequently, but unfortunately most of the time it gets asked once a person has passed away. So with everything in life, not all investments and all investment platforms and products are created equally. So I will try and discuss the most well-known and the most obvious ones. So certain assets get distributed outside of your will and then goes directly to the beneficiaries nominated and also does not attract executive fees. So some of these investments are living annuities. So here your beneficiary will have a choice to either take the money as a lump sum or as a monthly annuity, which will be taxed in the beneficiary's name, where the lump sum part will be taxed in the deceased estate's name. The next one is a retirement annuity, and this will be paid to beneficiaries as a lump sum. Endowment policies, this will be paid as a lump sum to the beneficiary, but some also allow to take over the ownership of that policy. Sinking funds, which is almost the same as an endowment policy, it's also a 5-year policy which will be transferred into the name of the beneficiary, or alternatively the beneficiary can decide to cash out the money. Next is the pension and provident funds. This will be paid as a lump sum to the nominated beneficiary once the trustees of the fund are happy with the beneficiary nominations. You must take note that trustees of a pension and provident fund has a responsibility to make sure that there are no other financially dependent people on the deceased and that payment to the beneficiary will not leave someone severely financially troubled. And once they have concluded the investigation, then they might decide to pay the full amount to the beneficiary as nominated, or they can even make alterations. The next one is the tax-free savings account. Some companies have tax-free saving account investments that are structured in a vehicle where you can nominate the beneficiary, and that might be a good idea to make use of that. Most tax-free savings accounts, however, do not allow nomination of beneficiaries. So if that is an important thing to you, I would suggest making sure from your advisor if your current tax-free savings account does allow for it. So now moving on, investments that would form part of the estate and attract executive fees will include bank deposits. So this will go into the estate and attract executive fees, money market accounts and notice deposits. Unit trusts, here it will flow into the deceased estate, can form part of the liquidity aspect of the estate, and the nominated heirs in the will can receive the residue once the estate is wrapped up. Shares will also form part of the estate and go into the deceased estate. It is seen as an asset in your estate. And lastly, properties, that also forms part of an asset in your estate, and that will form part of it. There will be executive fees on it, and then it will be transferred into the name of the beneficiary as stipulated in the will. So I hope these explanations help. It's short and sweet, but if legacy and leaving something for someone else is very important to you, you should consider the vehicle that you use and the way it is treated at death. So speak to your financial advisor. They will be able to assist you to make the right choices.
When you're navigating through life's big events, like buying a home, starting a family, or approaching retirement, you need sound and impartial financial advice. Mauritz Oberholzer, a financial advisor at Stonehouse Capital, specializes in personal financial planning. Visit mauritzoberholzer.co.za or call 082 774 1996. For practical and easy to understand advice and tips, don't miss your Money Moment with Mauritz Oberholzer, Thursday mornings at 10 on E-Radio.